Hey guys, welcome back. In this video, we are talking about how banks are increasing their lending to hedge funds, shorts forced to report, the AMC truth, and many more in this video. First, we take a look at this. So nobody's going to ask why the banks are excessively loaning money to hedge funds when they're struggling to survive themselves. So two things we have to understand before we go further in. What we're seeing is hedge funds are borrowing at an increased rate. And on top of that, what we have are banks who are over leveraged in their derivative positions and are not in a good financial position themselves. So already with that, you can understand how this is going to go. And when we take a look at this, what we can see is obviously how the borrowing is increasing. Now, especially in a time where people are claiming to be making tons of money, what we are seeing is how firms are in good positions. Why is it that they have an increase in the need for money? And one of the things that we talked about recently was obviously with Citadel and talking about how whilst they've apparently profited billions of dollars and needed to pay out to their investors, they didn't actually use the money they made, but rather they took up loans, they sold bonds, they sold part of the company in order to raise money to pay back their investors. So all of this are obviously very concerning things in terms of the overall economy, the overall market. And one of the things that we have to focus on and really highlight is you can see here. Further, declines in collateral and asset values can lead to their liquid assets and may leave them less able to meet short-term funding needs. As a result, elevated leverage combined closer inspection. And this is obviously just talking about how essentially they realize that an increase in the money loaned out is something that is very, very risky, hence why it needs closer inspection. Because whilst they claim that these hedge funds borrow to enhance returns, what we've actually seen in the past is that they borrow to actually repair the hole, is to repair the mistakes in which they've made. And in this case, what we obviously know is that hedge funds who are borrowing money, who are shorting AMC and GME, aren't borrowing money to enhance their return, but rather they're borrowing money to make sure that they can continuously suppress the price of AMC and GME so that they don't lose billions of dollars. And so that's obviously what we are seeing, and it's why we have to understand that the very fact that they're borrowing more money shows that they are not making money. The very fact that banks, despite the position that they've put themselves into and are still lending out money, shows they can't have these hedge funds blowing up because they realize how big of a situation it truly could get. And you can see here, guess what? This is the last week before February, where short sellers are required by law to file their short sale positions to the SEC. One of the things that we talked about last year was obviously coming into this year now is that the US Securities, the SEC, has required as of January 2nd, 2025, institutional investment managers whose short position exceed their reporting threshold in the month of Jan must file film show by Feb of 2025. And now this is obviously with the sake of bringing more transparency into the market. And when did get released, what we saw was actually some pushback, now obviously from the institutional side. The retail investors are obviously all for it. Whether it's a firm that's shorting hundreds of millions of dollars, as long as it's not done with, bad intent, as long as it's not done with naked shorting, methods that shouldn't normally be used, as long as they're settling shares, if it's all kind of fair and square, I'm sure everyone's okay with it. But what's obviously not okay, and that what we want to be transparent about, is when you are shorting hundreds of millions of shares of a position, when you have offshore positions that is not being reported, when you are not settling when you're supposed to, and you're resettling in terms of resetting these FTDs, whether it's with options, whether it's other methods. These are what we obviously want to know. And as we are seeing how the SEC is trying to make this more transparent, we're seeing some fight back. But of course, what we are seeing is that this is going to be obviously implemented. Now, the only problem is that are they going to find other loopholes? Are there going to be other ways for them to obviously find a way to get out of this? Because just like we've seen with short interest, with short data, firstly, it's self-reported. Secondly, any offshore trades obviously don't have to get reported. So we always get a skewed data. And so this is what I'm worrying about. But of course, we'll find out more when the data actually gets released. And now here is the truth about AMC, and it's my opinion as well that I will be talking about later on, but you can see some people's view on this. So what he says is, I think Adam Aron is one of the best CEOs of any public company. AMC should be bankrupt. It should have happened at multiple points during COVID. Now we have cash reserves for survival, a loyal retail investor base, movie industry recovery, gain market share, retail popcorn, even more control of concessions, creative deals, investments, and that's what I'm here for. So obviously, what you will see recently is that there's a lot of talks about Adam Aron. Now, it's obviously a mixture of both good and bad. And I want to talk about my opinion. And of course, I'm curious to hear what you guys think, whether it's about my opinion or just how you guys think about the company. Now, like I said before in the past, I believe that all of the decisions Adam Aron has made at the very beginning was obviously with the intent of doing good for the company. He's doing it with the intent of, I want to make AMC a better company, therefore I am making these decisions. Now, without a doubt, there will be some decisions that when it's made and that is fully being rolled out and implemented, it may not yield the result that he originally thought it would. And again, no one can be 100% certain of what will happen. So like I said, I do believe that all the decisions he make are for the better of the company, but there will be times when he has made a decision and it doesn't actually be as good as we thought. So, but I don't think that that's trying to be bad. Again, everyone makes mistakes. No one will be perfect. No one will be absolutely sure that their decisions won't work. Otherwise, everyone will be making the right decisions, but that's clearly not the case. And when you look at some of the things for AMC, like I wouldn't know, AMC should have been bankrupt. When COVID happened and AMC had to shut down, AMC should have been bankrupt then. And that's why the short sellers jumped on AMC. But it's the very fact that Adam Aron and the whole kind of business management of AMC, they managed to bring it back alive. Yes, they had retail investors, but at the end of the day, it came down to them to obviously operate AMC and allow AMC to stay alive. And I think that's very important. And you can see here, agree 100%, holding 21,000 shares, a drop in the bucket because I was also in Tesla from day one. The short said, better sell Tesla, it's going to zero. I sit back and laugh at AMC generated drama. Now, as I'm sure many people obviously believe this as well, like I said, you're obviously entitled to your own opinion. I can understand why you will feel strongly about this, especially if it's a very big investment. But, you have to make sure that you are not thrown off, you're not swayed by any other things. If you do think that Adam Aron is a bad CEO, so it will say it is, but at least come down to it with your own decision, with your own due diligence. Make sure that you have an understanding of everything that is going on. Don't just because someone said Adam Aron is bad on Twitter and then you believe Adam Aron is bad. If you truly think he's bad because he's made decisions that you think are bad, then of course that's fine. But like I said, I do believe that he's made all the decisions with the intent of doing good. And I think he has made very, very good decisions to allow AMC to obviously stay alive. Because when you take a look at some other things, we can see how AMC is able to actually reap, what it's done. And we can see it looks like January's box office is going to be a B, 5 days left, where we are seeing this. And, again, what we have is going to be a very, very strong year of box office in 2025. And like we've said, AMC has already said itself that it doesn't even need the box office to do well in order for it to be profitable. So that's obviously shown how AMC has improved their ability to obviously make money. So if they're able to be profitable without the box office being better, they think about how much more they will do when the box office is bigger and better. And so that's the year that we're in for. We're already seeing AMC in 2025 off to a very good start. You can even see Bigum saying 2026 is breaking 12 billion at the box office. So not only is 2025 is going to be good, it's only going to get even better and bigger going into the future. And I think that's extremely important. Now here, by the way, nobody should be talking about AMC debt. I don't give a crap. Thousands of businesses have debt even bigger than AMC and are in the value stock market as 500 billion plus. As long as AMC gets incomes, it's more important. So I do agree with him in a kind of having to put my own opinion onto this. I agree with him to an extent because I do think that we should understand the AMC debt. And in terms of why I agree with him is that people focus on the AMC debt because that's all there is to focus when you want to talk bad about AMC. You think that AMC has a debt and therefore let's attack that. But what we have to understand is that almost all companies are operating on debt. Debt is, not considered a fatal thing. Debt will only be a bad thing if, it's over 80, 90, 99% of their total, equity of a company. And so in this case, what we have to understand is we shouldn't just ignore about the debt. We have to understand how they're managing it, how they are paying it off, how they're using the debt to their own advantage. Those are the things that we need to understand. What I do agree with him is that we shouldn't be allowed to think that just because AMC has debt, it's a bad company. Because like I said, plenty of companies have debt. It's normally even considered a good thing because it shows that they're able to take on. It shows that people are willing to lend them money out. And it shows that they have more money to obviously operate. But yeah, guys, thanks for watching this video. I'll catch you guys next time.